Capitec's actually like a really interesting company for us as FinChat because it's one of the first companies that we had like a little informal FinChat and we chatted about. And I remember from that and from the document on LinkedIn, which I looked over in my preparation for this pod, we could never really reach like a consensus of like, would you go long on Capitec and would you go short on Capitec? And I think having you guys, thank you guys for voting. Those of you who voted, having you guys chosen Capitec, I got really excited because we get to like re-explore this and kind of open like doors we didn't open. But before we get too deep, I think Randy, you want to say something about like the basic business of banks?
Yeah, I think it was quite an interesting one because if we think about it, this is like the first topic we spoke of, you know.
Yeah, one of the first chats we had.
And like we had this in like I think mid of last year, and it's like the knowledge we have now.
I was about to say we've grown so much.
We've grown so much, and it's like what we know now. It's kind of different. But like going back to like the basics of what banks do, like fundamentally all they do is they borrow money at a certain rate, and then they lend it out at a higher rate, and that profit margin, that margin they have, and that's how they make money. Yeah, that's how they make money. So this is just to everyone who just wants to know how like banks make money. But yeah,
and I think for me, as much as like Capitec has like this big David and Goliath newcomer story, I don't think a lot of people know like just when and how long it's been around, because its founding happened in 2001 and it was co-founded by Yanni Mouton, Michael Leroux and Rian Stassen, and these are like titans in the finance industry and just South African business landscape in general. I know Rian is big into wine and stuff like that, and a lot of their rhetoric and their culture, which we'll get to into Capitec, is just that they've sold other stuff like alcohol in more informal markets, and they've observed how these people behave and stuff, and they kind of channeled that culture and that free thinking into Capitec. And the growth the last couple of years has been astronomical, to say the least. I mean, as per August 2020, they have a customer base of 14.5 million people, and
which is really, really massive. It's like a third
of the population.
Just under a third of South Africa population.
It's crazy. And they've become like SA's largest bank by customer base, and their third biggest by market cap on the JSE.
And actually, Capitec share price has been talked about since early 2010s, when it really started getting a name for one of the greatest growth stocks on the JSE.
Really?
And a multitude of investors really wanted to get in on the party, and actually the share price 15x'd.
That's crazy.
Since early 2010. That means if you invested 1,000 Rand in 2010, it would be 15,000 Rand now, which is probably one of the best, probably the best performing share on the JSE. Since 2010, in the last 20 years. I mean, I think they listed under 10 Rand a share, and now it's at now it's at 1,000 Rand a share, but earlier this year it was at 1,400, almost 1,500 Rand a share. Which actually in 2019, at that share price of almost 15,000 Rand, they became the most expensive bank in the world, with reference to their PE. So it actually had almost 3 times the PE of its closest competitor, where most banks are trading at around 10 PE or lower than that, globally, bit lower than that. But Capitec was trading at over 30 PE, which is absolutely crazy. But and I did some digging, and I really found there's like 3 main reasons for this really big push in the growth stock. It was really that the majority of the shares in Capitec was really held by a small number of people. So over 50% of Capitec shares is held by people and on traded actively. That means, and always if you go look at Capitec, there's never more than like 20,000 of the shares being traded in volume. So the volume is very, very low, which means that if say now there's a big entity or big fund that wants to take up a large Capitec position, wants to put in 100 million in Capitec or 50 million in Capitec, they really had to offer a big amount to make sure that their order is met. So when you buy shares, you put in an offer, and then someone has to say, okay, yes, I'll take that, or I'll sell my share to you for that price. Just to make sure your volume is met, you really had to give a higher price. Almost that scarcity thing, because it was held
premium because of that scarcity thing, because it's such an
because there's not a lot of shares being traded, a lot of Capitec shares being traded, so you really had to give someone something that make it worthwhile for them. That really pushed up marginally that share price all the time, and especially because international investors and global funds really wanted to make sure they can be part of the developing country, in quotation marks, that returns that you get from a developing country, especially in a great performing growth stock, like Capitec. So a lot of international funds, a lot of international investors really dove into Capitec as one of their great diversifying options in a developing country. So, and then the second reason was that the share price really has momentum, and it's always had a lot of momentum since I mean, if you look at that graph, it's almost like a perfect exponential graph. It just goes. If you go from the listing up till now, it just goes really well, like that exponential growth. And that's where you'll hear a lot of traders say, and a lot of investors say, don't bet against the trend if you can't stay solvent in that position longer than the market realizes, oh shucks, it's just a trend, it's not really backed by fundamentals. And that's where the saying comes from, that a lot of investors can't stay solvent as long as the market stays irrational. So you really have to be able to outperform the market, or stay longer in that position, have a lot of reserve to stay in that position if you want to short Capitec, for example. So it really has that momentum through a technical analysis point of view. And then also, obviously, it's really been providing proper return. I think return on investment or return on equity of over 25% annually, just keeping on building that equity.
Also had like a very interesting like dividend policy. I think they issue 40% of their earnings out in dividends every year. So I can see why that would also be attractive to investors to get into that.
Yes, and it's all because they really found out, like you said earlier, the founders really understood how to work in this environment of informal markets and really providing a service to the unbanked. So that's the three main things that I saw it going up. But obviously we want to discuss more what's going on with Capitec at the moment, and would you invest in Capitec now? And the momentum seems to have been coming to an end a bit in 2020 due to COVID. And I mean, the recession has shown a bit of the light on some of the weaknesses that Capitec has. And the share is actually now trading at just under 1,000 Rand a share, which is
still not bad.
It's still not bad. It's very, very proper. It still has, I mean, it's still trading at a PE of 17, which is so much higher than the other banks. So it took his knock, but not as bad as the other banks. Even if their prospective earnings or their expected earnings are a lot lower than the other banks, like the drop in their earnings. But it's still, they're still trading at 3 times the PE of other banks, which is something interesting that we can discuss, as the market obviously still has some faith in this micro lender.
And I think before we get there, we need to like kind of talk about a couple of points just surrounding them. And the biggest one that everyone reiterates, the good and the bad of it, is like their customer base. The first thing you hear about Capitec, and I think we both touched on it, you and I, is just their customer base and how they've kind of carved out a niche. And so I think currently they're growing still at around 200,000 customers per month, even during like the pandemic.
Really? During the pandemic also?
Yes. They're growing it's insane. And
where do you think they find these customers? If they already have 14 million,
their rhetoric is always, they've always looked out for the unbanked, just the small guy that the other big four traditional banks just didn't kind of look out for. And they just say that they offer bank services that kind of like apply to just the ordinary South African, because in their view, the other four promote a system of kind of elitism in selecting their customers and tailoring their customers to a couple of people. And they've really done this by like really offering very unique and just simple products. I think they have a big thing where they say they have this huge thing in their culture where they only have one type of account. So everyone in the 14.5 million people on every income scale gets one type of account. And the type of account is very easy to use. The charges are very understandable. The ATM interface. And doing research, I went to go look at like an ATM, like to see like what's really drawing people. And I realized the ATM interface is super simple to use. There's no frills about it. It's just very simple. It's very direct. The app has historically, where other banks have kind of tried to sophisticate their app and make it more nuanced and make it do all these crazy stuff, they've kind of kept their level head and they've kept it grounded to make their app The app interface I don't like. I think it looks really ugly, but it does the job. It's really,
So they really went after that extremely simple product. Not a lot of differentiated products, just a single type of product, very simple. So their business is really based on scale and being able to bank 14 million, 15 million, 16 million
and
people in South Africa.
That's the big win, is that most South Africans are just that, simple.
And to add to that, like as you spoke about your feelings towards their app, I mean, looking at the numbers, I mean, their clients on their digital app has gone up 29%.
Yeah.
They're like 6.7 million clients, and the app uses
6.7 million people use the app. That means 6.7 million of those people have phones that can have the app, have smartphones.
Exactly. Yes. And the app users have gone up by 49%. That's 3.3 million people.
That's crazy.
And it's that simplicity, that, I mean, it's clearly working there with that.
Yeah, definitely. Actually, a lot of their revenue also comes from funeral services that they also
know that.
So a big portion of their revenue comes from funeral services that they provide to the same market, which is
what is this, like funeral insurance?
Yeah, I don't know. I think it's funeral insurance and people that pay for funeral services and whatever. And actually, during the hard lockdown, obviously everyone got very scared about the banks, financial services. And the executive of Capitec actually made an announcement, says, listen, it's not going to hit us as hard because we're still making our funeral revenue still growing. So actually during the pandemic and everything, their funeral revenue is still going up. However, even if it didn't work out at the end. But we'll still get to that.
And I think they come into a lot of skepticism because of the perceived model of unsecured lending, which is like historically a very unsavory business and just a very unsavory business model.
Yeah, there's a big moral question behind that.
And basically what the moral question entails is, so let's go from the basics. Unsecured lending is me lending you an amount of money that I would regularly require something as a surety for without that surety. So if, for example, I want to lend you X amount of money and normally I would take your house as a surety where you don't pay X amount of money back. I just say, you know what? No, you don't have to give me a house. Here's the money. So the problem with that is, first and foremost, because it's unsecured, because I don't have your house to kind of insure myself with, I kind of have to compensate for that risk elsewhere. And where we see this often show up is in the interest rates given on these loans. So they obviously have significantly higher interest rates because these are more riskier and the risk is getting factored into their interest rates.
Yeah, where they get to like closer to 30%.
The rates are ridiculous. And in the long term, you see especially lower income families start spending a higher and higher proportion of their income to kind of finance their debt. And then here and there you hear these stories of someone who gets their salary and they're so indebted to kind of like unsecured lending that all of their salary and more could never pay back their loans.
And it's quite a scary process because so a lot of people actually would start by just borrowing 1,000 rand. And just because they miss a payment or something like that because they don't have a stable job or whatever, they miss a payment, suddenly the interest rate goes up, or maybe they get classified as being you need debt relief or whatever, and then they get refinanced. They refinance that loan, and now suddenly they owe 1,500 rand. Now they can't pay that, so then the interest accrues, and they say, "Don't worry, we'll just give you." They just refinance that loan. And that's actually a scary process. That Viceroy said that this was happening. We don't have exact proof about that, but what the question was around those debts is that they keep the people indebted for 20, 30 years because the people can never pay off the debt. All that happens is that interest accrues and they just send them to a debt. Someone gives them debt relief and then they just refinance that loan. So which keeps the people indebted, and they just, like you said, they just keep on being under that debt burden.
And to address this, President Cyril Ramaphosa, I remember when this was announced last year as officially being signed, it wasn't only Capitec that had a fit, but it was a general feeling amongst the four people. And what this is a debt amendment bill. And so he said that if you owe an amount up to 50,000 rand and your gross income is up to 7,500 rand, and you're unable to pay it back. So it's back to this level of indebtedness we're talking about. And you're unable to pay it back. You can have your debt suspended for 24 months. And if after 24 months, you still look like you're in an unsavory situation, then you can have your debt canceled, which obviously went for a lot of the customer base of a Capitec who's become known for unsecured lending. And there was a big concern
and that whole bill that Cyril Ramaphosa went after was really to protect the extortion of uninformed people who borrow money from Capitec. Because so there's obviously, to use debt properly, you really need to know how it works, and you need to know the process. And a lot of people need to buy food, and then Capitec tells them, "No, I'll lend you 1,000 rand, whatever, till the end of the month, and you just give it back." But then at the end of the month, they have to give back 1,200 rand, and they actually just earn 1,000 rand.
Yeah,
and that was for me what made me uncomfortable with, especially the response to the debt bill. Executives from just banks in general and the financial services were saying stuff like, no, but what you don't understand, Mr. President, is we're loaning these people money, like you're saying, to get food and to feed their families. Not like we're not doing anything. And now you're making it very difficult.
Yeah, they say they're actually socially responsible, and it's a nice thing.
I was very...
No, but to be fair, Phila, back in the days, it's now early 2000s.
Okay.
2000s, sorry. Early 2000s. Micro lending, especially in informal markets, was seen as actually an impact investment type thing.
Okay.
Because you're helping people bridge finance that thing.
Josh,
the thing is, obviously, there's a big thing there where you can really extort people by using them that they aren't informed to make higher returns. You can ask 30% interest, and the people don't really understand that 30% is actually
a lot of
incredible, and they can't afford that debt. They can't afford it. So yes, there is a social responsibility of helping that bridging bridge finance that where they don't get their money or their salary only at the end of the month or every 2 weeks or whatever, just to cover the last days of the month. But that has got people enslaved heavily under this.
One of the people in financial services, I laughed at this when I was researching this. After this bill came out, said that no, now because government is releasing this debt reform, we're driving people to loan sharks because now we won't be able to extend them credit. How valid do you think that is? Because it is valid to a certain extent.
That makes sense because it is fair because they won't be able to because banks obviously won't give you won't loan you anything if your salary is less than 7,500 rand. So then if you need to bridge that finance that shortcome in your money, you will go to a loan shark, obviously, and loan sharks are extremely...
That's extortion.
That's extreme extortion. They ask massive amounts. They completely breach credit regulations because they don't really operate because everything works in cash.
Yeah.
So they're not regulated, or they try to be regulated, but they still go over the regulated portions.
Would you guys see this as the lesser of two evils?
The thing is, there are new startups coming out with new ways to fix this issue.
Yeah.
And actually, Brian Abana is part of a startup that's addressing this, where they're actually building a platform where employees, it's actually a payroll system, where you'll be able to get the money that you've earned so far. So, like in the first 15, when as the performance obligations
are fulfilled,
are fulfilled, you earn the revenue. Like that, the same with your salary. So if you've worked for a week, a week's salary will be made available for you, even if you only if you should only get it at the end of the month. So they tried to build this payroll system that you can actually get off the day you can get your money. But they have this clever way of introducing financial education, and how the better you do with managing the money, the more of that is unlocked. So at the beginning, you can only get a quarter of the amount of money that you earn. And then the better you are with your money, you can unlock like more. 2/4,
so like you get points for like
4/4
being more savvy.
Which is, I think, a lot better, a very, very good way to rather solve this bridge portion, which has gotten a lot of people in trouble.
Okay. I think that would be really interesting to see how that kind of pans out and how that kind of develops. But back to Capitec and especially the effect of COVID, I think we can all argue that the Capitec customer base, the people that they are targeting, are probably the people that are going to be most affected by the pandemic, being through their loans and defaulting, and not even through that, just like foot traffic through the actual bank, because they are more susceptible to kind of losing their jobs in that pandemic. And
Capitec is highly reliant on branches. So, I mean,
I listened to one of the, I know it was Kharifari. Was it Kharifari? I think it was Kharifari. He's the CEO of Capitec, and he was talking about how, because they're so highly reliant on branches and they obviously still keep on building these branches. At the beginning of the pandemic, they had to kind of close 50% of their branches, and they had to come up with innovative ways to kind of get the people who work in their branches to work from home. And they said that they kind of solved that problem too. So I thought that was very interesting.
That is very interesting.
But because so much of their business and so much of their clientele are just like traditionally low and middle class people, obviously they're going to be most affected by the pandemic, and obviously this is going to reflect in the bank's earnings.
Yes, and they're the first people to lose their jobs, as you say. Like they are the more informal, lesser schooled individuals in the economy. So they are the first people who lose their jobs, who are replaceable, or so it's scary, but that's who they bank. Their main market are the people who lose their jobs first.
And that's where, like, I guess the question of sustainability comes into account.
Yes.
You know.
In seeing that, they projected that, I thought I misread this the first time I saw it, the earnings will fall by 70%.
Yeah.
They actually revised that and said it's going to drop by 78 to 82%.
Yeah.
Really?
Yes.
Yeah,
which is all the banks made an announcement, said the earnings will drop, obviously. But
I think they were the first ones to come out and talk about how much will it drop. Do you guys think, 78 to 82% is a large percentage?
It's a large percentage of your earnings. The problem is, most of the banks came out. Most of the banks said like 50, just over 50% or something like that, the earnings will drop. Capitec's large portion of earnings, and this is something that I still find extremely irrational about the market, which I don't understand.
Okay.
Capitec obviously shows that they aren't dealing the best with the recession and the pandemic.
Yeah.
Just as we said, their customer base is highly affected, right? The earnings drop by the most of all the banks, and they are still 3 times valued than the other banks, which doesn't make sense. If their earnings drop, the PE ratio is based on the February year end, February earnings, right? That's 17 times that. If it drops by 80%, that PE ratio will go up with how much?
Yeah,
it's almost 10 times. So it's crazy to think, how does it make sense that the bank who's dealing the worst with the pandemic still has the best valuation out of all the banks?
Do you guys think, because they say the 70% is due to, like we're saying, loan defaults, low transaction volumes, and a sharp decline in people taking up actual loans, right? What are like the long-term effects on them? What are you guys like seeing? Do you think we'll see from a business standpoint, not from a share price standpoint?
I think it will be interesting.
Do you think we'll see them come back to where they are now?
I think it will be interesting to see, because they're going to release their interim reports probably in the next month, or in November, early November. Which I think the line items that's really going to be important to look at is their allowance for credit losses and the actual debt write-downs. So the
write-offs,
complete write-offs. Because that's where we will really see the impact of how COVID really hit them. So obviously the earnings can just be reduced by that increase in allowance for credit losses, which is not really realized yet, but they expect that to happen. But they could still recoup it, or it could just be solid write-downs.
To what extent do you guys think that is attributable to the new write-down rules that every bank complains about every time they get an opportunity to? Every time they get an opportunity to complain about the new IFRS 9 and the impairment they have to realize they do, to what extent do you think that will contribute to their financials?
I still think, because in our discussion that we had last year, one of the big things that we actually spoke about also is that if a recession comes, Capitec will be the first one to
Dude.
burn down.
Yeah.
And it's because it's really hectic. Their debt write-downs are going to be really hectic.
Yeah.
Which are really going to be interesting to see how they deal with that whole thing. Because the problem is they obviously, when you a bank, part of the portion that they borrow are from the depositors' money, and they take that money and they loan it out to people through unsecured lending, right?
Yeah.
If they can't recoup that money, they can't give the money back to the depositors.
That was our big thing last year.
And what happens then is there's a run on the bank, and then the bank fails.
I was looking, and I was going to get to that now. I was looking at our discussion last year, and we had a point. It said too big to fail, question mark. Do you guys think they're too big to fail?
Yes. They, like I said, 40 million customers,
and
40 million customers who, and most of them are depositors who have their money in the bank. If 14 million people lose their money that they put in the bank, it could really, really have an...
But this is not the American Fed bailout.
That's the only thing. Our Reserve Bank, that's actually a great comment, because our Reserve Bank is very conservative with that. I mean, the Sechek Khanyago wouldn't want to bail out the bank.
He's very conservative.
He's very conservative, which is a scary position. I'm pretty sure that Capitec's management is clever. They're not making losses. Their earnings just dropped by, it's not more than 100%. If it was more than 100%, they'd have losses. So they're still making money, which is positive. They're just writing down a lot of loans, which will be really interesting to see. So that's the big risk I'd look out for in their next the interim financial results. Yeah.
And I think, to go back to your question, in terms of outlook, I think it's going to be really tough, because I don't think even right now we felt the full effects of COVID, and the strain on the economy. We've seen a drop. Then what we're going to start seeing, even going into 2021, is how it really unfolds when people do try get jobs again. When you try, and when you're in the full, like, if we hit our second wave and everything, and how we handle that, because we're still in early days.
If we have a hard lockdown again,
we can't.
It's very tense.
I think a lot of banks, our financial services, which is like South Africa's
jewel.
Yeah. Because we world class. Our financial services are world class. If we have another hard lockdown, some of the banks will fail completely. And I know the banks aren't really, a lot of banks, and that might actually create an opportunity for Standard. What am I saying? That might actually create an opportunity for Capitec, because I know a lot of banks are really taking their attention away now from that unbanked. Like even FNB, who really wanted to compete with Capitec, for that informal market, or really actually pulling away from that now, where they're really focusing more on the higher end client side, so more closer to Investec's client base, the more elite, niche, rich, high net worth individuals, the people who could really provide proper credit to them, the lower risk credit. So that could actually increase the market, or open up the market for Capitec to almost save them through that, because they have a lot more mass coming through, so they can take a bigger hit on their write-downs. I think
that is risky though.
Just before COVID, they still took like 25% credit losses, right? They still allowed 25% of their book. They still write on every year, because they know they won't make that money back. So if their masses increase enough, and they have that 30% out of, we're not talking moral now, we're talking business point of view. They're still asking that 30%, and their customer base increased to 20 million. Their earnings will still increase, even if they have to write down.
Cover that shortfall.
And actually, like, COVID has had a really, obviously, financial services has been hit the most by this, because when everyone can't make money, the banks don't get their money back. And that's why the first things that we saw in the hard lockdown was debt relief, and you get a payment holiday, etc., etc. And actually, First Rand was one of the biggest losers, if I call it that, in that their share price dropped 50%, from 65 Rand a share to 39 Rand a share. And Nedbank took a 35% drop. Standard Bank took over 30% knock. And that you can really see in the JSE Financial 15 index that went from 16,000 points to 10,000 points. So you'll always see like the financial services and gold price trade like inversely. So when the gold price goes up, the financial services
going down because people want that security from gold. Okay.
Because it's almost like the two opposites of value.
Yeah.
So financial services value is driven from future cash flow, and gold's value is driven from just the incremental value of gold, just being able to sell it at a certain price. So it doesn't have future cash flow; it just has an exit value, where banks as a future cash flow. So the banks are extremely undervalued at the moment, and I think it's because of the uncertainty, and everyone's still looking at how the banks will solve this whole problem, because we're not only having problems with the economy, we're having political pressures and everything around that, which could really put pressure on the banking
already
system.
existed before COVID as well, and they were already under pressure from that. And as a result of this, talking about Khanyaku, they got recommendations from the SARB, and one of them was like, guys, I don't think you guys should issue dividends, guys. I think you guys should maybe relax on that. And I think that will kind of help Capitec in a way, because they issued, like I said earlier, 40%. It's a dividend policy to issue 40%.
And you know, still, earnings. if they issue 40% of their earnings, but their dividend yield is still less than 1%.
Really?
That's how expensive the share is. The share is extremely expensive. The dividend yield is 0.8%, and they distribute 40% of their earnings. Yes.
That's insane.
No. That's insane. That's the biggest thing for me. Capitec is way too expensive.
Just building on like what you said, with their responses to COVID and with the whole not issuing dividends. They also took a couple of other measures, such as no cash bonuses to executives and no increases of directors' fees and executive fees. And I think what I saw when I was looking at their statements and their summaries. Their diversification tool is increasing credit cards, customers, and the funeral plan. The February ending 2020 results, like funeral plan went up like 7.6 times from last year.
So that's a lot. The diversity in their product offering is kind of working in their favor.
Yeah.
And it's still the same philosophy. I don't think funeral plans are the most prestigious products to offer. I don't know if prestigious is the right adjective, but it's just, I know my grandmother.
It's such a simple service that everyone needs.
It's just we're badgered by it on TV, especially like just South African, like SABC TV, just badgering of funeral services, and there's like a huge need for it, like you're saying. So it's kind of interesting to see them kind of venture into that and kind of
and especially because of the African culture really puts a lot of emphasis on the funeral. Find it very, very important. Like funerals are very, very important. So they just provide those services, and they obviously the broad majority of their client base are African.
But like in Capitec's defense, they have come out, because this is not the first time some of the critics have hit them, especially with their customer base. And last year, they came out that they said that they've reduced the exposure to just unsecured lending to less than 5% of their book. So less than 5% of their book is unsecured loaning. And they say that they've also been in anticipation of this bill that Cyril Ramaphosa passed. This was last year. They said that they have been anticipating it because it's been in the talks for a while. So they've also reacted.
Yeah, obviously they must have been in the conversation when obviously Cyril wouldn't just come out and say this. You obviously would have had conversations with the CEOs and management of the banks in South Africa.
And Khari Fourie continually stresses that there's been a higher migration, which I think is interesting, of middle and high income clients as a result of their product offerings targeting pretty much everyone. Therefore, they're kind of starting to reduce their dependence on the clients that they're known for. And they also continually stress that only 1.1 million of the 14.5 million of their clients actually have credit with the bank.
I wonder how true that is, though.
I wonder what the effect of the 1.1 million is. Even if it's true, I wonder how much credit they have.
Yeah, but they take out large credit. I remember when the bill also got announced. They also had the press release to say that most of almost all the people that they have credit with Capitec have salaries more than 7,000 rand a month. And they earn actually a proper salary. So that was and I mean, Capitec share is one of the biggest behavioral investing shares I've ever seen, because like news would come out and their share price would drop, and then the management would just make an announcement, goes out on News 24, boom, up is their share price again. Which is just absolutely crazy for me, because that just means that people are like a bit skeptic of what it is, so they're just waiting for that one thing in the news to come out.
Yes.
But then they're also like, no, I don't want to miss out, and then they just get back into it. So, that's one of the reasons why I would stay out of it. I like, they still make proper return on equity and so on, but I would stay out of it just because of that heavy behavioral and perception based value that they have.
Again, random disclaimer in the middle of our podcast: we're not offering any financial advice. We're not telling you guys what to do, what to invest in, what to not invest in. We're not financial advisors. This is just like a colloquial conversation we're having. So don't use this for your kind of investing. Look more into it. Do your own research, supplementary research before. Don't
make your own opinions.
Yeah. And going back to what we were saying, there's all this thing of reducing like an unsecured lending, but like they quietly entered into the space on this weird website, webuycars.net, webuycars.com, where they're offering unsecured lending to like old cars, not like secondhand cars. I guess secondhand cars too, but like the first guy they offered a loan to was for a car. I think it was a VW that was 10 years old.
No way.
I'm telling you.
So they're giving them unsecured loans on second-hand cars.
Yes, it's on their financials. It says purpose lending. They call it purpose lending. Unsecured vehicle finance. They say in partnerships with We Buy Cars. Their first client was VW Touareg 3.6 V6 TDI 2010 at 189,950, 60 month at 16.7%.
16.7%. Bro. This is crazy.
I found that so interesting because they were like,
they ran the models and obviously they came up that they will make a lot of money from it.
Oh yes, they also were like,
there must be need for it also.
Is there a huge second-hand car market in South Africa?
Yes, there is. Big. Most people drive around in second-hand cars.
10-year-old second-hand cars, because some banks do like provide some form of financing for like, if you sell me a 2018 BMW,
yes,
right? Do you think there's a market? But they've probably done the analysis. I have a friend who's starting to work
I just don't know why you would do that as a consumer, from a consumer side. I don't know why you would buy a 10-year-old second-hand car and then finance it through 16.7% loan.
Maybe people don't know better.
Yeah, and it's I think
maybe people don't know better. It's just that I can get a loan for this. It's not secured.
Yeah.
You know, maybe that would be the rhetoric going in. Hopefully, Capitec also makes it clear. Just like, obviously, they don't want to shoot themselves in the foot, but maybe like makes people cognizant of how kind of expensive this is.
I'm sure that they'll make money from this. Obviously they did the models.
Thoroughly researched. I have a friend who's working at Capitec next year, and I was asking him because there was a big concern about it just when lockdown started. And I was like, dude, aren't you concerned? Dude, like, you might lose your job. I was going crazy for next year. And he was telling me, not really. He's met like the risk team at Capitec. And he's like, it's some of the most brilliant mathematicans I know. It's
and
just
they've just found out how to make, they have a special way of dealing with all of this.
They have a special way of dealing with risk.
Yeah, they're fantastic with managing their risk. That they know how much what the hit is that they're going to take. And they know how much money they need to make from the better credit to cover that of the bad credit.
Even the friend of mine they recruited for this, like, he's brilliant. I can't think of like a better person. He's like brilliant. He's doing his honors in like some type of math, some weird type of math.
Yeah.
And just so I can see why maybe those decisions are very thoroughly thought of and kind of, consulted risk wise. But I wanna talk about PSG and Capitec because they share a very like intertwined history.
Yeah, obviously same founder, both from Tons.
And they're very intertwined because, like I was talking to you guys, they also created a lot of value for PSG. I mean, they were founded 3 years within each other. I think PSG was founded in 1998, and then Capitec 3 years after that. And like I just said, they've built great value. And so I remember when this unbundling unsurfaced, everyone started asking like, why would PSG want to unbundle? What's going on at Capitec? Yeah. And then it came out that because of like this new legislation that has been passed, they'd have to like comply. They'd be basically classified as what we call a financial conglomerate. And as part of that, amongst other administrative things, they'd have to keep like an amount of capital in the stash just ready, just chilling there, where they wanted to be more nimble investors and they wanted to be more participant and active investors with just like that excess liquidity that would be chilling there. So they decided it would be better to unbundle, which was huge in the market because we've associated PSG and Capitec as one and the same.
Yeah, I mean, PSG has always been like almost a vehicle to invest into Capitec indirectly, as like almost like as a cheaper nominal value to invest into, because I mean, PSG traded around just under 200 Rand a share, where Capitec is over 1,000 Rand a share. So, and literally their share prices move. So the correlation is crazy. So, yeah, I mean, even PSG's market cap was just exactly their Capitec holding before the unbundling. So the value of the Capitec holding was the PSG market cap.
And this actually was estimated to end up freeing 7.8 billion. And quickly, for those of you who don't know what an unbundling is like when a company who invests in another company kind of gives the shares that they invested in another company to their shareholders. I don't know if that makes sense.
They take it out of holding. So they, same thing that happened with RMH, that happened, I think last year or earlier this year, where RMH was like a holding company that the founders of RMB and First Rand used to hold their shares in First Rand and so on, where they just took away that vehicle and gave it directly to the shareholders because there was a lot of adding holding companies in the early 2000s, and there's actually like a holding discount that always happens, and you still see it in PSG now, where they're still trading at a discount to their holdings. Yeah. So if you add all their holdings, the market caps of all the
underlying parts.
Yes, they and it's just because there's like a holding discount where if they just sell off everything, they'd make a profit. Or if you buy PSG now and they sell off all their holdings and just return all the cash to their shareholders, you make like 20% return.
Do you see these newly unbundled shareholders of like Capitec shares just selling them?
Well, I don't know. No, I don't think so. I think there's obviously, I think the biggest question is, would people keep on investing in PSG?
Yeah.
Just because PSG was like a big vehicle to use to invest into Capitec, basically.
And some of their portfolio also has been looking shaky. I know the Curo, I don't know how to say it.
Curo, yeah.
I know their holdings in Curo have been shaky because a lot of the parents as well have been unable to make payments because of the pandemic.
But it's still a proper wealth management business. They have a lot of clients who trust them. So yeah.
And a bit of a weird one, not weird, I guess, because I guess it's a growth strategy. They acquired Mercantile Bank last year. So Mercantile Bank was like this niche bank that was helped by like the Portuguese government through something else, right? And it operated in Sandton. And it was just a business bank. And their CEO constantly says that we only bank entrepreneurs. Like, if you're not an entrepreneur, we don't bank you. You should hear him. He's very excited about it. It's like, if you're not an entrepreneur, we don't bank you. Only if you're an entrepreneur, we bank you. We just bank entrepreneurs. I was like,
which I think is a proper business model. It's really what's needed.
Great.
And so they completed that acquisition. They went through the tender process and they completed that acquisition in late 2019 to kind of offer, I guess, another form of diversification in their business, to kind of have like a business banking leg, which is like a natural progression, I think.
It's actually quite interesting because this acquisition, for a lot of skeptics of Capitec, it gave them like another almost reason to be more skeptical of Capitec. So the Capitec obviously are building a lot of branches, a lot of like physical, tangible assets.
Everyone's
closing. They built a 750 million rand office in Techno Park in Stellenbosch. They're building all of those, all of the branches that they're buying, and now they bought Mercantile Bank also, where a lot of Capitec skeptics would say that they bought that to almost substantiate their statement of their financial position, to like strengthen their balance sheet, show more stronger assets rather than just having financial assets, having actual tangible assets. But yeah, it's interesting to look at.
I think Mercantile Bank fundamentally is like a cool business though.
Yeah, I
For the
think
niche
that's
people they
really,
do
really
serve, 'cause
important.
it's also really very niche.
Yeah,
I just think fundamentally it is like a really, really cool business.
yeah.
What do you guys talking about the branches? Because I want to circle to that. What do you guys think about that in a climate where a lot of the banks are closing down their branches? I mean, we don't have like two standard banks anymore in Hatfield.
Yeah.
That was very nice.
Inconvenient.
And it's interesting to see that in an environment they still see the necessity of it where others don't, or where it's too expensive for them. What do you guys like think
Well,
about?
user acquisition is obviously for them the most important thing. And their client base are people who walk in the street and then we just go into, if there's a Capitec nearby, if someone needs a bank account, so now someone comes to work in your home and they don't have a bank account, right? For them to open a bank account, they won't be able to call someone to open a bank account or go on the internet, whatever. They would just drive into the city, see whatever there is, and then they'll go into that bank and open a bank account there. So they're obviously just putting them in the eyes of their potential customers.
And also to add on that, it's just understanding their customer base, right? It's a lot of people that, as we've always spoken about, is the lower end that conveniently, and also we also have to look at the customer behavior in that segment is that traditionally they are more familiar with branches. That's always seen like a norm and a safe spot for them. So that's why, whereas a lot of other banks are going into more digital, and that's they can do that because the customer base and customer behavior in that segment is going that direction.
And remember also with digital banking, there's a big language barrier.
Yeah,
right.
There is.
Because you need to understand English
because
fully, and you can't.
There's no word for geotagging in Zulu, guys.
Exactly, and you can't. There's a big language barrier, and so if you don't know how to open a bank account, and if you call someone and they don't understand you, it's really difficult to finish that up. When there's like when you see someone, you can start almost conceptualizing what they say, or even get someone to speak the same language.
I think for me the big concern was just like how aggressively they were going on about it. Especially pre-COVID, I don't know the exact figures, but they had like this huge notion to like
they were opening
a lot of branches.
Yeah.
And I think they said something to the effect of they want you, like you guys are saying, they said when you walk into a branch, they want you to feel like you're walking to a grocery store and the banking products are your groceries that you're getting. They want you to feel that simple. But I was just confused as to like it was so aggressive.
Yeah. But they obviously saw that in their strategy, and that's what they're following. But yeah, we're running a bit out of time, so let's get to the last portion of would you long or short Capitec?
I think for me personally, I was thinking about it on the walk here, and it's a bit of a tricky one. I think short term, I'd long.
Is it? Yeah.
And it's a weird reason, but because I think of the fact that a lot of people are like, there's still a lot of growth, and especially into the business banking. I love what they're offering with that and their strategy. I looked at their strategy for their business banking. I do think there's value, and I do think there is value in Capitec. And I know this is off the nation, but someone's gonna long it. So I'd long short term, and I'd short long term because I do see sustainability issues with them.
I would do the same, but slightly for a more trashier reason. I would do the same because of the market sentiment around Capitec. Like Josh is saying, every time something scathing comes out, management comes out and says no, but listen, and the share price rebounds. So they kind of feel bulletproof right now. So in the short term, I'd also go long.
Yeah.
But in the longer term, it really depends on how the business pans out for me.
Yeah. I'm going to be one of those people who say, like, I won't come near the share. I won't trade in it. I won't short it. I won't long it.
I just leave it alone.
Just because I don't understand it.
Yeah.
I don't understand how it gets its valuation. I don't understand how it makes sense. It's way too irrational for me.
Yeah.
Because I can't see it even as a discount to what it can be. I still even think that they're expensive for what the share is too expensive for what the business can grow into. Because they're nearing like the max of the customers that they can, the customer base that they can actually absorb, and the market size that they can take up. So as Randy says, like the sustainability is also an issue for me. So they have an incredible way to deal with risk. They figured out in some way how to deal with it. I still find like the nature of the customer base still makes me a bit scared.
Yeah.
And
Makes
so
sense.
I'll just stay completely away from it just because
Stay
I
neutral.
don't
Understand
understand
the business.
the rationality behind this.
A lot of people share your sentiment, actually.
Yeah.
And with that, that's like the end for today, guys. Thank you so much for tuning in. Thank you guys so much for voting. This is really you guys. Side note, I really thought Naspers was going to win.
Same.
You
Also,
guys,
please let us know, because we're thinking about maybe creating like more in-depth valuations and things like that we can provide to you over the newsletter and so on. So let us know what you really want for us from that.
Shoot us a DM, shoot us a comment, get into contact with us. Right now we're running the personal finance segment with Randy, who's just walking all of you guys through your personal finances.
Yeah.
So do check that out. I believe another episode is coming out this week.
Yeah, this week. But I think we want to remind them of this really cool podcast that Josh does. I don't know if you want to tell them the joke. I think it's really funny.
Josh, I forgot your podcast's name. I mean, it's Startup Stories, about startups and their stories.
Man. I guess every time, man.
Wow, we actually have a thing, guys. You guys should check everything out. Thank you so much for tuning in.
Remember that we have a weekly newsletter. You know, a lot of effort goes into that. So go into any of our social media platforms. Our handle is @FinChatCo. Go into the bio and subscribe to that page. We have Startup Stories, Personal Finance segment, and this podcast. So give it a listen. Comes out every 2 weeks. And thank you guys so much. We'll see you again in a fortnight.
Thank you.